we will talk.
इडली बनानी है।
Um, every day prices will be fluctuating, so we have to invest at the right time.
Okay, okay. So you have done any kind of investments earlier? Are you doing in mutual fund or stocks? Anywhere you are doing any investments?
No,
Okay, right now you have not started. So your plan is to start trading as well as to invest, right?
investment is
Okay.
short term.
Short-term trading, right? Swing trading.
Uh,
Okay, so you are looking for some kind of passive income, or you are looking for a kind of financial freedom you want to achieve through trading. How is it?
mm, yeah, short term gains and some passive income.
Okay, okay. See, my thing was like I was also working in IT industry earlier. I have now worked around 15, 16 years. So I started trading 10 to 12 years back when I was working at the time like you only, right? Right now you are working and you want to start a trading. Similarly, I was working and started trading, and slowly I switched my job and changed the job, and then I left the job. Now I am doing full time trading, mostly on swing trading, investments and all. Okay, I'll share my screen. So first we will start with very basics about the stock market. Sir, do you have any idea about what is the stock market and all?
No,
So we'll start from basics. So it's okay for you,
but
right? You can start from
yeah,
that. So why I why I became a full time trader? Because in this I can work from anywhere. I don't have to take leave. I don't have to ask for leave from my boss every time. Right, sir, I want leave. I want to do this. I want to do this. So that is the main benefit of trading, and there is no like fixed timings. Right? Here we have the timing from 9:50 to 3:30. So it is up to you like how many hours you want to trade, like 1 hour, 2 hours, or 3 hours, like that. It's not like you have to sit in front of the screen from 9:58 to 3:30 and continuously do the trading, right? So and we are our own boss, so we don't have to listen to anyone, right? Like you do this thing or that thing, right? So we are our own boss. We have to do everything by ourselves. We have to take the decision by ourselves. We have to plan everything by ourselves, right? So stock market is a kind of business. So treat it a kind of business only. You don't see many business. I have seen that they treat it like gambling or they want to earn more profits and all that. Like that. First thing is we have to treat stock market like a business. The way businessmen do business, right? Sometimes there will be profit, sometimes there will be loss, but you have to be in profit at the end, right? So there will be profit and there will be losses. Like out of 10, 7 trades will be in profit and 3 trades will be in loss. Then you are a good trader. That means. So, sir, these are the course videos which I will be talking about these classes. First is introduction about the market, how the trading and settlement happens, types of trading, the risk management, money
Okay.
management, introduction to basic softwares, and then some kind of technical analysis. So, do you know about technical analysis? Have you seen or have you heard anything about technical analysis earlier?
Yeah, I know that. The first they need to know the financial status of the company and debt and
So those are the part of fundamental things. So those are the part of fundamental things. We will talk about technical analysis like charts and all you have seen, right? Candles and all you
yeah,
have seen.
but I don't know anything.
So those things are the main things that we have to learn to trade or to do swing trading. So those things I'll teach you about how to do the technical analysis, how to read the candles, how to read the charts and all that.
Okay.
But you might have seen some you might have seen some videos or somewhere in the YouTube like the candles are there, like red and green candles are there, and all those things, right?
Yeah,
So you might have seen that, right?
yeah, I've seen, but I don't know the
Uh,
meaning of the candles,
that is fine.
green and
That I will teach you. That I will teach you how to do it. The I just wanted to know whether you have seen that picture or not. That's it.
yeah, yes.
So charts and all we will be discussing about charts, trends, patterns.
Okay.
We will talk about some candle analysis, price, volume, right? Some kind of indicators. We will talk about the price action, the strategies, how to choose the stocks for trading and long-term investments, how to apply these indicators on the charts and all, right?
Mm-hmm.
So, sir, do you have a demat account, right? You have a demat account now.
Yes, yes.
Okay, so we'll start with the financial market. So this is called as financial market or uh, two types of market are there: primary market and secondary market. So primary market is basically the things like whenever the company comes with an IPO, right? So sir, you might have heard about IPOs, right? So many IPOs are coming these days, right? So the IPOs always comes in primary market. So sir, have you ever applied an IPO earlier?
No,
Okay. So
I heard
IPOs,
it was difficult to get allotment.
huh, that is true, but you can always apply, try to apply it. See, the concept of IPO is like whenever the company want to raise the funds or whenever they need funds, at that time they will come up with an IPO, right? So in an IPO, we have to do some kind of bidding, right? Bidding.
Mhm.
So this bidding you can
Yeah,
do in number of lots, right? You can apply
mhm.
minimum one lot and maximum of
Yeah,
10 lots we can apply as a retailer. So in IPO there are different categories, right? The retailers, institutions, right?
mhm.
So we are
Individual.
an individual. So we are a part of retailers or individuals. So we can apply from minimum one lot to maximum 10 lots. But these institutions, right? They can apply multiple lots, right? 100 lots or 200 lots
Mhm.
like that. They have a minimum capital of 2 lakhs. They have to apply minimum 2 lakhs. But as a retailer or individual person, we can apply minimum of 15K, right?
Mhm.
So that 15K equals to one lot.
Okay.
So whenever company wants to raise the funds or whenever they need the fund, they will come up with an IPO. IPO is initial public offering. We call it as an initial public offering. So these IPOs will always come in primary market. So
Okay.
we have to do the bidding and we have to apply in that IPO. So if we get that IPO, if that IPOs get allotted, then they will be listed in secondary market, which we call it as a stock market. So secondary market is called as stock market, and this is a primary market. So in primary market, we have to buy in lots. Minimum quantity is 15K. But once it is listed in secondary market or stock market, we can even buy in one quantity also.
Mhm.
Let's take an example of a IPO. The IPO price is let's say from 150 to 200, say. So here we will do a bidding of this price, 200 rupees. The maximum price, if if we do the bidding, there are chances to get more allotment if we do the highest bidding, right? So in this case, how much quantity we will get? We have to apply for minimum seven quantities, right?
Yeah.
Because the price is 200, right? The maximum we are offering is 200 price, right? So we have to apply
Yeah.
minimum seven quantity, which will come around 14,000, right?
Yes.
But sorry, it's not 70, it is 70 quantity, not 7, it is 70
Yeah.
quantity. So
Yeah.
minimum we have to apply 14,000, right? So once it comes to
Yeah.
secondary market or stock market, then we can buy minimum of 200 also, right? One quantity. So
Mhm.
that is the difference between primary market and secondary market.
Mhm.
This is clear, sir. Any doubt in this primary market and secondary market?
Yeah, it's clear. Yeah, if the price range is no, 100 to 200, if you bid for a 200 maximum,
Uh,
chances are more. Right?
yes, yes. So you might be bidding at a lowest price. That is why the difference is there.
Mhm.
But normally this is an example, but the price difference will not be that much. I will show you one
Yeah.
example. One second, I'll show you an
It
example.
will be at 20%.
Uh, Recently we have an IPO capital, Tata Capital IPO, right? I'll just show you the details. See here, this is a recent IPO, which is Tata Capital IPO, right?
Mhm.
So if you see here, these are the categories, right? Which the person can apply, right? QIB, NII, retail, employee, right? So
Mhm.
we are in this category. We are in this category, retail category, right?
Retail.
Yes. These are QIB, NII. These are big eh, companies or big institutions like bank, LICs, mutual funds, all those things. They are under QIB and NII, right? And then there is one more category called employees. Employee means the employees who are the employees of Tata Capital. They can also apply, right?
Yeah.
So these are different categories which can apply for a specific IPO. And if you see here, Tata Capital, the issue was open from 6th of October to 8th of October. And the issue price is 310 to 326, right? So in this case, you should always apply for a higher bid, 326.
Okay.
So the chances are more to get the allotment, right?
Okay.
And the bid lot size is 46. So means one lot equals to 46 shares. So 46 into 326. If you multiply, you will get around 15k, approximately 15k you will.
Okay.
So like this you can do it. And now you can see that how it was subscribed, right? The mutual funds have subscribed around 3.4%, 3.4 times actually, right?
Mhm.
The the retail like individual investors they have applied like 1.10 times. Employees have applied three times like that, right?
Mhm. Now, what is the ratio? The uh, retail share is more, right?
See, this is the highest one, right? QIP, if you see, they have applied the highest one, 3.42 times.
Yeah. Uh, their their share is a
Shares offered, yeah, these are the shares offered, and there's a max. There's a bid they have done, right? See, they can apply for more also. They can apply for more also, but the chances are less because
and their
maximum they
share
can.
is decided before, right? The 9 million out of 33 million.
Yes, yes, they
So
got this much.
their share is a 30%. So fee is decided for
They have applied for this one. These are shares bid for this. They have done the bidding for this much of shares, and and they are offered this much.
Okay. Gaurav, so 9 million, right? 94 million.
Uh,
94. Out of
yes.
333 million, 94 million are allotted to QIB. So it's the percentage is decided like for retail, they allocated 50% or what?
See, here you can see it.
Okay, the number of shares is offered. Okay,
Yeah,
got it.
offered and paid. Yes, right. So this is the one, and this is the amount. You can see amount is also there. Right? Okay. So in non-institution buyers, there are two categories: the bids below 10 lakhs and the bids above 10 lakhs.
Okay.
And for us, it is maximum 2 lakhs we can apply. See, retail investors who can make application up to 2 lakhs. We can apply maximum of 2 lakhs.
Okay.
So this is how it is subscribed.
Mm.
See, we as a retailer doesn't matter for us like what is the ratio and how much we can apply because anyways we can apply only maximum of 2 lakhs only, right?
Okay.
Right. So
Yeah, so it's a listed, right? Already listed IPO.
this will be listed on Monday.
Okay.
So have
Tata.
you applied in this IPO?
No.
You should have applied. I applied 2 lots and I got 2 lots. Both the lots I got.
Okay.
So these kind of IPOs you can apply like the companies, the brand IPOs like Tata Capital, LG. These IPOs you can apply because these are the brand names, right? Big brand names you can apply.
How
And the
much you
size
expect?
is not much, maybe 5 to 7% of this thing is in Tata Capital. But if I show you LG, right? LG IPO, LG IPO, I applied 3 lots and I got only 1 lot. But in this, I am expecting 30% listing is in LG because if you see here, see in LG, see QIB 166 times, so much, right? They have
Yes.
bid for this much and they got this much. So it's a very big one. So here in LG, I am expecting around 30 to 35% of this thing
Okay.
right? So this is how you can check. But at least you can apply in the branded ones, like the names that you have already heard, like Tata, HDFC, LG, Paytm, and all, SBI, Canada, Robiq, all those things you can apply because these are the brand names, right? We know about
Yes.
the common people knows about these names, right?
Yes. Yes.
and uh, and then you can check about the business also, which the business segments they work, and all those things you can check. Right? So this is clear. Any doubts in the I2 section?
Yes, Gaurav.
Yeah. So this section is clear. I2, any doubt in this?
No.
Okay. And one more thing you can check in IPO, which is called as GMP.
Mm.
So this is gray market price.
Oh.
So gray market price normally is for those companies which are not listed in the stock market,
Okay.
right? So based on the
First time
GMP,
they have to.
first time when they are coming with IPOs and all, at that time you can check the GMP. Based on the GMPs also, you can decide ki how much it will be listed and all, right? If I show you the GMP of LG, one second, GMP of LG, IPO, GMP. There's no specific site to check that, but at least if you search in Google, you will get that. So, so here you can see that LG Electronics GMP is 380 as of today. So what is LG Electronics IQ expected returns? Expected return around 33%. Based on the GMP, we can decide, right?
Okay, LG Electronics is already there. It's already listed company.
It's already closed, and I think on Tuesday it will be listed.
No, it's not a new company, right?
No, the company is old, but they have recently come up with the IPO. They didn't have the stock. They didn't have the stock in India.
Okay.
So this will be listed on Tuesday.
Okay. The GMP price is 380. So more than that range, right?
Yes. See, the range was I showed you that the range was how much. So the range was the range was 1080 to 1140. So there the GMP is 380 rupees, means 38 approximately 35 36%. So based
But
on
what
the
that
thing,
means? Gray market price?
uh, it is grey market price. GMP grey market price.
Okay. If I bid for a 1140,
Uh,
I will get the one lot.
the
Okay.
chances are more. It is not like that it is
Yeah.
confirmed that you will get.
It is a gray market. Then that is a prediction.
Ah, grey market price is a prediction. That is not a fixed price. The fixed price is this one only. But
Uh,
that is a grey market price which is running at the back end.
okay.
The big institutions or the big companies, they are expecting that the grey market price has to be approximately 35% from this price.
Okay.
So that is why they are expecting the listing has to be around 30 to 35% from this price.
No.
So this is the way. So this is one more way you can decide how much you may get the listing gains.
Okay. Yeah, and usually we'll get the profit in IPO. Any company you recently seen like is below that range, listed below that range?
WeWork was an IPO which was listed flat, but after that it came down to 5%, minus 5%.
Okay.
That's smart work, right? Smart work analysis.
Mm-hmm. Yeah. Big IPO.
It was a big IPO, but there was not a craze in the grey market because they had some legal issues, I think, going on with the company in the court. That is why people didn't show the interest in that IPO, and that is why it was listed flat only.
Okay.
Okay, so now we'll come on to the exchanges. So we have two exchanges in India: Bombay Stock Exchange and National Stock Exchange. So you might have heard about these exchanges, right? Already, Bombay Stock Exchange and National Stock Exchange. So why we have two exchanges? So it's like a same thing, right? As you want to do shopping, right? You can buy that product either from Flipkart or you can buy from Amazon or you can buy from Myntra, right? That product is there in all the websites, but it is
Yes.
up to you from where you want to buy it or where you are getting more discounted rates. Similarly, here also many companies are listed on both the exchanges, and some very few companies are there which are listed only on BSE or on NSE, right? So, but 90-95% companies are there on both the exchanges. Bombay Stock Exchange is the oldest exchange, right? It was launched in 1986, but this National Stock Exchange was launched in 1990. So, in Bombay Stock Exchange, there are it basically consists of 30 stocks in BSE. The main when it is started, right? At the time it has 30 stocks, and in NSE it has 50 stocks, and we call it as a Nifty 50, right? Nifty 50, you might
Mm-hmm.
have heard about Nifty 50, right?
Yes.
So this is the index of National Stock Exchange and Sensex. You might have heard about Sensex also, right? Sensex is the index of Bombay Bombay Stock. So Sensex has 30 companies in it, means 30 top companies of India. And Nifty 50 is 50 companies, means 50 top companies of India.
Okay. So, the BSC, both the BSC and NSC is a privately owned, right? It's not a.
Yes, yes. They comes under SEBI actually. SEBI, Security Exchange Board of India.
Oh,
So they are the controlling authority, like RBI control banks, right? RBI is the controlling authority for all the banks. Similarly, SEBI, SEBI, Security Exchange Board of India, is the controlling authority for all stock market related things, whether it is IPO or exchanges. So they are controlled by SEBI.
okay. Now, Sensex, that indicator is comes from a 30 stock.
Yeah. 30 stocks are listed in the center. It's like a class, right? You can see that the class is having 25 students, some class is having 35 students. Similarly, here also, Sensex you can consider is a kind of group where 30 top companies of India are listed.
Okay, every time, I heard every 6 months they will evaluate and remove
Yes,
the
yes,
non-performing
yes,
stock
yes,
from
like
that
that.
group.
Yes, yes, yes. Both in
Yeah,
Sensex
well,
and
Nifty 50 and Sensex is always the three times, right?
based on the historical data you can think of. See, right now Sensex is around 85,000, right?
Mhm,
And Nifty is around 25,000,
mhm.
like that.
More than two times.
Yeah, you can think that. So BSE, when BSE was started, the value was 100 rupees, like not 100 rupees, we cannot say 100 points, and now it is
Mm.
85,000. And Nifty started at the time the base value was 1,000, and now the value is 25,000. Both the exchanges are
Yeah,
located
the value is calculated based on the
stocks
number of.
value, but stocks and percentage. Yes. So here the timings are written wrong. Actually, the timings of our stock market are 9:15 to 3:30.
Mm.
Both exchanges, Bombay Stock Exchange and National Stock Exchange. Monday to Friday we are working. Saturday, Sunday is closed. And if there is any government or national holidays, then also it is closed, like Gandhi Jayanti, Deepavali, Holi, and all those festivals.
And formula, how this index is calculated.
Yeah, those
It
things,
is,
and based on the percentage they have decided for which stock they have given the certain percentage. Like the top stock, HDFC is having the highest ratio. So I will tell you later how to calculate it.
oh,
So now demat account. So demat account is a basic thing that uh, like for money we are using savings account, right? To keep money we use savings account. Similarly, to keep the stocks or shares we have to use the demat account. So earlier in 1980s or 1990s they were having the hard copies at that time. They didn't have a software or a soft format to keep it, right. Now we have a demat account where we can keep in the terms of software. So there are two companies which are handling these stocks, NSDL and CDSL. So these two companies are the main depositories that are storing the stocks in soft form or digital format. You can say that, right? So there are many companies, many banks or many brokers, you can say, which are providing the demat account facility, right? So some of the top names are like SBI, HDFC Securities, ICICI, Kotak, Zerodha, Zerodha Grow. Right. So these are the top brokers which are providing the demat account facilities. So which broker you are using? Which broker you have the demat account?
group.
Okay. Okay. So now some important terms which we should know in the stock market trading and investing. Like open price, see, there are prices, right? For every stock, there is a price, right? So
Yes,
there are
yes.
basically four prices in every stock: open price, high price, low price, and close price. Every stock will have four prices. So open price is the price at which the stock opens at 950.
Okay.
Close price is the price at which the stock closes at 330. So high and low is the price which the stock keeps on fluctuating within the day between 915 and 330.
Mhm.
So based on the volume or based on the buyers and sellers, the price will keep on fluctuating within the day, right? So let's say there's a stock Reliance, right? It opens at 1400 and it closes at 1430, right? So this stock can fluctuate with any value between the day. It can go up to 1350 also low, and it can go back also 1450 also. But there is a limit decided by each exchange where a stock can move, right? So that limit says about 5%, 10%, 15%, and 20%. So it depends on that stock. That stock lies in which category. But these are the more main categories in which the stock can move 5, 10, 5%, 10%, 15%, and 20%. But there are some penny stocks also which can move in a ratio of 2% also, like plus 2% or minus 2%. So these are like plus and minus. It can go to plus 5% or minus 5%. So these are the bands which are decided by the exchanges specific to each stock or each company, you can say.
Okay.
Okay, so these are the open price, the stock price in the beginning of the day. High, the stock price is at the highest level. Low price, the stock is the lowest level, and closes at what time it closes, right? So these are the four prices that we have to know.
Okay.
And then we have volume, right? Any idea what could be the volume? Volume is basically like the number of buyers and sellers. So the volume says how many buyers, how many sellers are
No, it's a both buy and sell both.
there. Yeah, mix. Right. And then we have bid. So the bid price is the price at which the buyer is interested to buy. The bid price is called as the price at which buyer is interested to buy. Offer, or we can call it as a ask also. Offer price or ask price. So the price at which seller is interested to sell. So there are only two types of participants in the market: buyer or seller.
No.
Because the money has to be exchanged between a buyer or a seller. Right? If you are a buyer, then that means you are buying from a seller, and if you are a seller, that means you are buying from a buyer. So simply like let's say you are going to a shop to buy fruits and vegetables, right? So he is a seller and we are the buyer. So we are paying the money,
Yes.
and then we are buying. Similarly here also, it's like buyer and seller concept.
Right.
So bid is the price at which buyer is interested to buy, and offer or ask is the price at which seller is interested to sell. Right? I will show you on the there is one website. One second, I'll show you on the website. You might have heard about the website nseindia.com.
Yeah.
So for each exchange, we have a website. For BSC, we have a BSC India. I will show you both the sites. So basically, like a shopping app, right? Amazon or Flipkart, they have a website or app, right? Similarly, here also we have a website, NSC India. So if I click on this website, reels, so you will be able to see a lot of data which is there on the website, right? So first, I will tell you how to find the stock in this site. So here there is a text box: search by company name. Okay, let's say I want to see HDFC Bank. So I'll write HDFC Bank, and then it will give me the search. So now this website has opened me the data related to HDFC Bank, right? So here you can see that HDFC Bank, and this is a code, right, for HDFC Bank, and then this is the price it is showing. So on the last trading day, this stock went up by 0.45%, which is 4 rupees 35 paise. So that is why it is showing in green because the stock was up, up, up last trading day, right? And here you can see the prices also: open price, high price, low price, and close price of the last trading. So this website will show you the data of the last trading day. This will keep on changing every day. Right? And here also it will show you the previous
So
close.
here there is no live trading data is not available here.
Sorry,
The NSE doesn't show the live trading data. It
so
is only last.
will show because today market is closed, right? That is why it is not showing today's data. If the market is open, then it will show you the live data. Okay. And here historical data, right? Once you go to historical data, then you will be able to see the previous data. All the data. One day, 1 week.
Historical data 180 per day, right?
Yes, yes. Because if we are seeing the daily chart, that means there will be only one entry of each date, right? But if we go to weekly chart, that means the whole chart will show you for full week, right? The week will start on Monday and the week will end on Friday. So Monday to Friday it will show you the price. And 1 month and 3 months, 6 months and 1 year, like that it will show you. And if you to see the more data, then you can filter the dates from, and based on that you can filter the date. So these are all the prices: date, open, high, low, previous close, LTPs, last traded price, the close price. So these things these things we will talk later. First we just see open, high, low, and previous close, and LTP, last trading price. So here, because since the market is closed right now, it is not showing any data here. But if the market is open, it will show you the data. Like this is called as order book, right? So here it will show you the bid and ask, right? I just explained you about the bid and ask, right? So bid is the price at which buyer is interested to buy, and ask is the price at which seller is interested to sell. So whenever the market is open, this will show you the live data.
Okay.
Yes. So, so someday whenever we are doing the class, at the time if the market is open, then I will show you how it will look like.
Okay.
And here it will show you the quantity also. What quantity they want to buy and what quantity they want to sell.
Yeah, it will show only top 5 or top 10.
Here it will show you less only, but once you go to Demat account, it will show you top 50 like that.
Okay.
So here is the trade information is available, like the number of traded volume, the number of traded value, the total market capitalization of the company. Total market capitalization is like stock price into number of shares. Stock price into number of shares, right? Free float market cap. So what is free float market cap? Let's say a company is having 100% of shares, right? So what they are doing, let's say this company is sending 80% shares to the market and 20% they are keeping with the promoters, right? So this 80% is called as free float market, which is available for normal public to buy and sell. Okay, this is clear. Free float market cap. मैं क्या देखो उसमें देख लो sir, good morning. How are you, sir?
Yeah, I'm good.
This class. Share my screen and then we'll start. So in the last session, we have finished till this point, like instruments to trade. So these are the instruments that we can trade in our Indian stock market, correct? So,
Yes, yes.
so now let's see the timings. So there are different market timings for each instrument. Like for cash and stocks, equity stocks and FNO, the timings are from 9:15 to 3:30. Mostly on Monday to Friday, or apart from that, if there is any holiday, bank holiday or something like that, then they will be also. But mostly it is from Monday to Friday.
Sure.
Currency also we have a like same days, but the timings are a bit different from 9 a.m. till 5 p.m. till the evening. The ones who are the forex traders who trade in currency, they can trade till 5 p.m. And then we have commodity. So commodity starts in the morning 9 a.m. and it will go till late night around 12 p.m. 12 a.m. actually. 11:55 p.m. 12 a.m. a.m. actually. So it's more than 12 hours. Right. So here you can trade in gold, silver, crude, natural gas, copper, zinc, all those commodities. And this takes place on MCX index. This is MCX index. This is on NSE and BSE. And currency is on CDS, and there is one more exchange. I don't remember the name, but there is one more exchange, CDS. There are different exchanges on which these trading happens. But when you create a demat account, at that time only you can give a request to the broker that you want to trade in currency, or you want to trade in equity, or you want to trade in commodity. There, at that time only they will give you access, and then you can use it.
Okay.
Okay, now coming on the stocks, there are different types of stocks. They have divided the categories of the stocks, right? So there are basically four categories: large cap, mid cap, small cap, and penny stocks, right? So they are divided based on their market capitalization, right? The more the business they are doing, based on that they have divided the market capitalization, right? So for large cap, it's approximately we can consider like more than 20,000 crores. They are considered as large cap stocks, and if they have a market cap between 5,000 to 20,000 crores, they are considered as mid cap. And market cap less than 5,000 crores are the small cap stocks, and penny stocks are having very less market cap, like less than 100 crores. Like
Okay.
so, first rule is to invest is like you should, large cap are very less risky, right? Because they are the big companies, the top blue chip. These are the less risky. They have mid cap are almost like medium risky. You can say that small caps are risky, and penny stocks are high risk. मेरे को छोड़ देंगे इसको भैया को क्या करेगा तो These are basically the very small companies which have just started, right? So they are not yet growing. That is why they are very risky to invest. So we can follow this kind of rule if you want to invest in this. Let's say you want to invest 1 lakh rupees. Okay. So how you can do is that you can split your capital among all the four categories. Like 50% you can put in large cap because they are very less risky. And then some capital you can put in mid cap 25%, 15% in small cap, and very less in 10% in penny stocks, because these two are the highly risky things. So that is why we can divide the capital in this. But if you have more risk appetite, then you can change your percentage. Like let's say there is a young person around 25, 30 years of age. He may be having more risk appetite. What he can do is that he can increase the capital, right, for more return. See, the more the risk, the more is the return in stock market. So if he is looking for more return, then he can increase the percentage here in small cap and penny stocks, and can reduce from here to here. He can adjust based on the risk appetite. Because normally, if you see in large cap are tend to give 12 to 14% per year if you keep it for 5 years. Mid cap is around 18 to 20%. These two are giving around more than 25% return. Right? So, more the return, the more the risk is there, right? So, based on your risk appetite and based on those things, you can plan your investments for long term. Similarly, you can plan in even in mutual funds also. You can do like that, because in mutual funds also we have different categories: large cap, mid cap, small cap, flexi cap, like balance fund. So, based on that, you can decide which funds you want to start the investments. So, sir, right now, are you doing any kind of investments in mutual funds?
No.
Okay. So, so maybe it's a good idea to plan now, because this will be good in the long run. If you keep it for 10 to 15 years, you can do the investment, then it will make you a good purpose.
No.
Okay, so this is clear?
Yeah.
Okay, one second, I just want to say one more. Okay. So they are different. So there is a basic chart which I just want to explain, right? So types of capital. So basically there are two types of capital. One is the human capital, other is the asset capital. Asset capital means you are investing the money and it is giving you return. Like if you are investing the money in plots, or if you are giving investing the money in apartments, or if you are investing the money in stocks or dividend stocks, right? So they are giving you uh, kind of passive income. So that is called as asset capital basically, right? And what is human capital? The thing is that we are working, right? We are working for somebody. We are working in a company, right? So we are getting salary. So that is basically a part of human capital, right? But both of them are a part of cash flow because we are getting money from both the resources, but we can consider it as cash flows from both different resources, right? So there are three ways to use this money. Either you are earning from salary or you are earning money from PPAs or dividends. You can spend it based on like 50% based on your expenses, and you can save some percentage around 20%, and then 30% you can invest. So there are rule like 50, 20, 30%. So you should always invest the money in some, either in assets or in stocks or wherever you feel you want to invest. So are you doing any kind of investments anywhere in like property or real estate or anywhere?
Oh yeah, property.
So you have, so you have some assets. Right?
Yeah.
So this is how the investment rule works. And then we have this cat. If you want to invest in stocks, we have these types of categories in the stocks, right? Like the growth stocks, dividend stocks. Any idea about dividends, sir?
Yes, companies with a dividend share the stock with the shareholders.
Yes, yes, correct. So we have blue chip companies, the cyclic companies, right? So they have certain cycle, like for 3 months they will earn profit, and remaining 3 months they may not earn profit because of market and all that. So these are called cyclic companies, and then we have defensive companies, right? Defensive companies means who are working around the clock, who are getting business around all the time, right? Like FMCG, fast moving consumer group like ITC, HUL, right? Because they are selling soaps, grocery, and also, but the people use these things on the year, right? All over the year. So that is why they are considered as defensive. Even if you have seen that during the COVID times, also these companies are doing good because they have earned a lot of, they have sold a lot of things, online things, and right home delivery and all things. So that is why this sector is called as defensive sector. So we have different sectors in stock market, like IT sector. Maybe you can say that TCS, Wipro, ICL. These are the IT companies. Then we have FMCG, fast moving consumer group like ITC, HUL. Then we have auto sector like Tata Motors, Mahindra and Mahindra, Maruti. Like these are the auto companies. Then we have pharma, like pharma like Cipla, Lupin, Dr. Reddy, Sun Pharma. Right, these are the companies of pharma sector. And then we have something called finance, like financial institutions, right? Or banks, you can say HDFC Bank, ICICI Bank, Muthoot Finance, Chola Mandalam, right? Sham Finance. All these are part of financial institutions, right? Then we have oil and gas category, in which we have ONGC, right? We have Reliance, and then there is a sector called PSU sector. We call it that public sector unit, which has like BHEL, BHEL, Oil India, right, NMDC, and IOC, BPCL. All these are a part of PSU. So these are the most of the common sectors which are available in the stock market. You can do the investments based on your appetite. Okay, so this chart is clear. Okay, so this is about the dividend investing. How they invest? The companies will give you the companies earn profit, and based on the profit they will share the profit with the shareholders. So it depends on the company to company how they are distributing the dividends. Some company distribute the dividends every quarter, or some company they distribute the dividends only on 6 months basis, or some companies will do it once in a year. So some companies which are giving dividends right now are IOC. Mostly the PSU companies are giving the dividends. IOC, BPCL, HPPL, ONGC. So these are the top companies which are giving good dividends to the shareholders. So if you are thinking to invest in dividend rated companies, then you can start investment in these companies. So there are different dividend yields for these companies. That I will show you in a software where you can check all the details of the each company. So there is a website called streamer.in. So you may need to create a free user ID on that. Wherein you can check all the details related to So have you used this website earlier?
No.
So let's say I want to search a company called IOC. So I have to enter the name here, Indian Oil Corporation. And now it will show me all the data of the company, right? All the fundamental data, everything it will show to me, right? Like the market capitalization of this company, right? 2,17,622 crores, right? The current price, 72, right? And if you want to see the dividend yield, it is showing 1.95%. And there are certain other parameters that you can check, like depth, right?
Dividend, actually tomorrow, if I invest today, today.
See, there is a thing called X dividend date,
Oh,
on which the dividend will be paid on which you are eligible to get the dividend. Based on the date, you have to plan. Let's say the date is today, right? Today is 11th. So today is 13th of October, right? If a company is having the dividend date of 13th of October, then you have to be a shareholder on this date. Then only the company will give you the dividend. So like that. So this is ex dividend date. You have to remember the date. So these dates you can check. These dates you can check maybe on money control, or you can check in your demat account. Because in account, once you go to stock, it will show you in demat account also.
वहाँ पे रात हो रही होगी ना रात में अच्छा तुमको पता है यहाँ पे बात हो रही है
Let's say this is actually if I want to see the details of the stock, I just put the name here and then I can see the plus icon. I just add that stock here, and then once I click here, it will show me the fundamentals. So I have to go to fundamentals, and here you can see all the details of this company also. Right? The overview it will tell you about the company, what is the company and all, right? Here it will show you the market cap and the type of stock, which is large cap, right? And once you go to here it will show you see dividend of rupees 3 per share, right? Next date is 8th of August. So this company declared a dividend on 8th of August. So you should have been a shareholder on this date. Then please so this is 3 rupees per share. If you have purchased one stock of 154 rupees, अगर 8th of August
Simplifies the sales support the translate.
Yes. So if you want to see the history, you can see the history. Last year they have declared the dividend of 7 rupees in the month of July. Similarly, in 2023 they have declared the dividend of 5 rupees on November 2026. So if you want to see the history, so here you can see the history also. So here they have given a bonus also, right? One bonus shares for every two ads. So if you add two shares of IOC, you will get one stock extra for IOC. So this is called bonus. So some companies which will give you sometimes bonus also, right? Like plus to one or two to one or three to one based on their their decisions. They will give you bonuses. So all the details of the year you can see here. So when they are declaring the results, right, the quarterly result, we show you the dates here. You can see that quarterly results every time, 29th of August, January 2021. Right? So all the corporate announcements details you can see here. So corporate action. And if you want to see the news related to the stock, you can go to news and see like what is happening in these stocks. Right? All these things you can see. Next is financials. So if you want to see how was the results of previous quarter and all those things, you can check the financial summary also here. Like in the month of, if you want to see the yearly result, you can see here, right? In the month of March 2023 for 1 year, they have reported 8,41,746 sales. Right? Here is the sales, operating profit, net profit, all the things are shown here. You can check. Right? And then we have shareholding patterns, right? Means how much percentage they are holding the share. Like promoter is holding how much. On March 2025, they are holding 51%. FIS, foreign investors, they are holding at 7.39%. DIS, domestic investors, they are holding 9.97%. And retail category like like us who are small shareholders and all, they are holding 6.15%. So this is how you can see the shareholding pattern. And then we have peers. Peers means the competitors of the same company, right? Who are the competitors of IOC? BPCL, Hindustan Petroleum, Atma, will show you all the details. See, here it is having the IOC is having the highest market cap among all the peers. Here it is showing you this is return on capital, right? How much you have invested based on that, they are giving the return. Return of capital employed. Correct.
And is it a percentage earned on the market capital or the
No, it's like whatever amount you have, the amount you have invested, right? So based on that, it will show you the return. And then we have P, right? This is price to earnings. So this price to earnings will decide how costly is the company or a stock or how cheap it is the stock. Right? So if you compare these three, right? IOC, BPCI, and Hindustan Petroleum. So this is having the least P. This is the cheapest among all the three stocks. Price to earnings may be but some sectors which are expensive like insurance sector, right? They always have P's, right? 50, 60 P's like that. But normally if you see to a normal business, they are having a P within the range of 1 to 20.
can you explain what is
Huh? Sorry?
can you explain in detail?
P. So P is basically the price to earning ratio. Price to earning. So this is basically a ratio which decides how expensive or how cheap is the company, like the price of the company, right?
बड़ी प्लेट में ले
How
लो
cheap or how expensive is the price of the company. So there is a formula to calculate the fee. I just
How it is different from the restaurant?
see that is a percentage based on the investments
So
you
you
have.
should seven lakhs and then I'll get the 7,000 rental in a area, right?
Yeah, yeah. But P is basically for the fundamental of the company to decide whether the stock is expensive or the stock is cheap. Let's say you want to invest. Okay, let's say you want to invest in these companies. How you will decide? So there are two ways to decide. First is you can check the fundamentals, which is the P, or we can check the technicals, which is chart. So which we will talk about in the further classes. Technicals, right? So this is a fundamental way to check whether stock you should invest on the same category, right? So this is the which category? This is refinery category, right? So if I want to decide which stock should I invest, then as per the P, this is the cheapest stock, which is 8.48. Okay. The price will not decide. The price will not decide. See, price is like a thing that you can see only, but there are many other things that decide whether the company is cheap or expensive. Like if you want to see the sales, right, profit, all those things we have to see to consider whether the company is doing good or bad, whether the company is cheap or expensive. The valuation basically. This is called as the checking the valuation of a company. Right? So P is one of the parameter to decide the valuation.
मान तुम भी ले लो
Then what is the
Sorry.
तुम भी सांभर ले लो
last one?
Okay, D. This is debt to equity ratio. Based on the debt and the number of equities, they try to filter out the debt to equity ratio. So in this, we have to see the one which is having the least debt to equity ratio because debt means they are having some rules, right?
तुम भी
So
सांभर ले
debt
लो
to equity ratio, we have to see whichever company is having the least debt to equity or whichever company is having the less debt, that we have to put my money in that because they have less rules, right?
That means Hindustan Petrol is a 1 lakh crore. The debt is a one lakh 30,000.
No, this is not in see. This is not in money, right? This is not in lakhs or crores, right? This is a percentage they have calculated. So, like it can go to 1 to 5, right? Or it can go to zero also. Sorry, it can go from 0 to 5. The company which is having the zero, see in this if you see that this is having the least, right? 0.64. So that means it is the best.
वेट है
It is best. This is the debt to equity ratio. See, this software is very smart. It has marked the star also, right? You can see that. So the parameters which are pretty good, this software marks the star based on that, and then you can decide. So, like if you see here for BPCL, these three are the parameters which are showing the best thing, right? P is also best, ROC is also good, and the debt to equity ratio is also good. So that means right now this is the best company to invest among all the four. So you have to consider multiple parameters to decide which company you want to invest. If they are fundamentals, there are thousands of parameters to consider, but these are the main things that we can see.
I gave down
Right? This clear, sir.
Yeah.
Okay, so here you can see this kind of information for any company. So similarly, in this software also there are many things, but we are not going in deep based on the fundamentals. But what you can do is that you can try to explore the software and then you can see what the things are there. Right? Like here it will show you all the depth debt to equity ratio. So many parameters are there, right? There- So apart from PE, there is one more thing called industry PE, right? So similarly, the PE for a company is there, and similarly they have a PE for the whole industry, right? So that also you can check. And then this is an important parameter to check promoter holding and pledge percentage. This you can check. See the pledge percentage has to be zero. They should not put at loan of the company. They should not have put the shares to somebody else, right? So that is called pledge percentage. So these are the things you can take a look and you can explore. And if you have any doubts, then you can ask me. Like afterwards. Okay. Next we move on to this slide. Okay. So Nifty 50, there is one formula which I will explain you how to use it, right? So how each stock contribute in Nifty 50, right? So there are 50 stocks. Each stock is having a different percentage who contribute in Nifty 50, correct? So the top ones are HDFC Bank, which contributes around 13% weightage, ICICI Bank 8.4, Reliance Industries 8.2, Infosys 4.7, Bharti 4.5, ITC 3.2, and HUL 2%, right? Okay, so how to calculate the percentage being added or the number of points being added in Nifty based on the each stock movement, right? So let's say HDFC moves 1%, right? 1% into the weightage into the value of Nifty. So I have considered the value of Nifty is 25,000 right now. Right? So the percentage move into weightage into Nifty value. So it is coming around 32.5 points. Right? So that means 32.5 points will be added to Nifty. So now Nifty will become 25, 0, 32.5, right? So similarly, if Reliance Industries moves 1%, then it will add 20.5 points to the Nifty. So that means it will add 20.5. So like this, every stock in Nifty 50, all the 50 stocks are having different weightages, and based on the percentage movement in those stocks, it will get added to Nifty 50, and this is how Nifty 50 moves up and down. So after that, it will add total index change and it is showing me 106.5 points. So that means the Nifty will be 25,000 plus 106.5 points. So this is how the movement happens in Nifty 50. Even if you see Sensex also, right? Sensex has 30 stocks. So based on the percentage, the movement will happen in Sensex as well. So this is how all the indexes will move based on the components of it. Fine, this clear?
Yeah, yeah. What is the how? So the Nifty is 25,000 and Sensex is 80. Okay, so
See, yeah, that's
the
what.
stock.
It depends on the stock which are there because in Sensex there are 30 stocks and here we have 50 stocks. So the percentage will be more in Sensex for each stock. Here the percentage may be less. So all depends on the constituents of the index and the percentage they are being given.
Okay.
Okay, now coming on to the types of types of trading. So there are basically three categories of trading or three types of traders you can say in this market, right? scalping, scalping, intraday trading, and positional trading. Scalping is like they are very big players which are doing for 1 to 5 minutes. So they will enter and exit within 1 to 5 minutes. They are called as scalpers.
Okay.
They will take very less points because they are having more capital, right? They will be having 5 to 10 crores of capital, right? So they will play for 1, 2, 3 points and then they will exit. So maximum 1 to 5 minutes they trade with last, right? Then intraday like we have timings from 9:15 to 3:30, right? So intraday traders are those traders who take entry within this time and exit. Entry and exit within the same time period. They are called intraday traders.
That interest on capital should be
9:15 to
calculated
3:30.
only on opening capital because that was the capital for the whole year from beginning first April till 31st March. So what's the capital on that only interest will be
Then we have
paid.
positional trading. Like
But
if you want to take the
sometimes
trade for more
in
than one day,
questions, till
that is
now
called
whatever
as
questions
positional trading,
given
right?
in all the
If you are
questions it
taking the
was
trade
given
for
their
one day,
capitals on first April or this.
that is called as BTST, means
So
buy today,
blindly we took the
sell
amount
tomorrow.
and we calculated the interest on capital.
Buy today.
Okay. But now you have to be
So this is
careful.
called BTST.
This thing I'll be telling you again.
And then
You
if you
have to
want to
be
take the trade
careful
for
with
more
the
than one
trading
day, it is
schedule.
called as short term, like 1 to 3 months. If you want to
Sometimes they
take
will
medium
give
term,
you
is
the
like from
closing
three
time.
to 6 months if you want to
Closing
carry,
time means
and
which is there
long term
on the
is
last day of the
more than
year.
6 months.
In which all the things are
So
at
this is a
that
category
level.
they have formed: short
We
term,
don't
medium
want
term, and long
that
term.
capital. We want the opening capital. And for that we need to make a working note to calculate the opening capital and then find out the interest on capital and then do adjustment table. Adjustment table will be same, only that calculation of opening capital
Okay,
will
this
be
is clear, sir.
Yeah.
so. So for
Okay. So
closing
apart from trading, we
capital,
have many important things,
we
and this
always
thing, risk management and money
for
management also we
closing
have to do
capital we
along
always
with
add
trading,
for the
right?
opening capital we add the net profit and
So,
interest
sir, any idea how
for the EBITDA.
how you can do this management?
But now we have to do the reverse to calculate the
Right.
opening
So there are two
capital.
things that we can do in risk management. So we have to plan our trade, right? To plan our trade, we have to see many things. So they are basically these parameters which are important, right? Let's say you want to take an entry in a stock, okay? You want to buy a stock, right? So what you have to decide first, you have to decide the entry price, right? At what price you want to buy, right? First you have to decide the entry or you can say that buying price. You have to decide the buying price. Second is you have to decide your targets, like whenever you want to put the profits, right? Target price. Third thing is very important, stop loss. Any ideas sir about the stop loss?
Yeah. Should use should put a stop loss so it will tell us.
You can say that just you want to.
डैमेज है पूरी लिंक का
You can say that uh, insurance against your trade. You can say that insurance against your trade, right? If let's say your entry price is 100,
पहली लिंक का पहली
your
वीडियो
target price is 120, so you have to keep one stop loss maybe
एक्चुअली ये काम
90 or
करता है
95 you
साथ
can
करता
keep. If the stock goes through this, you have to book your losses. So you have to plan both the directions, up as well as down, because this is stock market. We don't know like whether the stock will 100% go up. There is no 100% guarantee in stock market, right? So based on the technical analysis and fundamental analysis, we have to see plan these things, right? So stop loss, entry price, and target price. These three things are very important. Stop loss is the most important thing that we have to follow, right? And then we have trading stop loss, right? So how it works? Let's say your entry point is 100. Okay, your target price is 130. Your stop loss is 95. Okay, so let's say now your stock moves to 120. Okay, So what you have to do, you have to move your stop loss from 95 to 100 or 110.
Sharing profits and losses in
You
a
have to change it because your price has already moved towards the upside, right? You have to change your stop loss from 95 to 100 or 110 based on your risk appetite. So this is called as trailing stop loss. Okay. So these are the four very important parameters that you should use, remember, and plan in trading. Entry price, target price, stop loss, trailing stop
between
loss.
partners without allowing interest on capital of 12% and salary to pay
It's
a
clear, sir?
Yeah.
during the year.
Okay.
We are between
And then we
15,000
have
to
risk and reward ratio.
so your working
See how much we have to keep the risk, how much we have to keep the reward. See, these all things will be done based on technical analysis only that we will talk about in the future lectures. But these things are very important to plan. Risk and reward ratio means, let's say you are thinking to get 10 rupees as profit, right? So you have to plan your risk as well here, right, sir? So if you want to take a risk reward of 1 is to 2 ratio, then you have to put your stop loss as 5 and target is 10. That means you are having a risk reward ratio of 1 is to 2, right? Similarly, if you want risk reward ratio of 1 is to 3, then you can think like 5 rupees stop loss and 15 rupees target. And if you want a risk reward ratio of 1 is to 1, then 5 rupees would be your stop loss and 5 rupees would be your target. So, scalpers, they mostly work on 1 is to 1. Intraday traders mostly work on 1 is to 2. But some intraday traders work on 1 on 1 off also. But positional trading, most of the positional trades are because they are taking risk right from more time. They are putting money for more time, so they are expecting more risk and reward ratio. So they work on more in these categories. Based on the capital you are using, it depends on the risk ratio. Let's say you are using more capital, right? Like 50 lakhs or 1 crore. Like, see, for me, I'm a trader, and if I am using a capital of 50 lakhs, then I will not wait for more than 3 to 5% of profit, which I will get within maybe 1 to 3 months if my choice was correct. If I have done a good technical analysis within 1 to 3 months, I am getting 3 to 5%. That means I'm getting a good return within 1 to 3 months, right? So it depends on the capital also. Because if you have a huge capital, then you will not wait for long time, right? For long return like 20%, 50% like that, right? Because you are a trader. If you are an investor, then it is fine. You can invest more capital in more stocks or mutual funds. But if you are a trader, so you have to plan your trade accordingly. Risk and reward ratio is very important in trading. So planning is very important. The thing is that most of the traders don't do any kind of planning. They will simply take an entry. They will decide the target price. They will not decide the stop loss, and their trade will get stuck. So these things, this management is very important in trading. So this is the overall plan for this management that we should think in each and every way.